And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Glad to see everybody here, friends, fellow traders. It's Wednesday, June the 1st. I can't believe it's June the 1st already. We've got 1 month before we go into the back half of the year already. Hard to believe. But as usual, we're focusing on context, good risk management, and staying patient in our trading today. My name's John. Thanks for joining me and trusting me with your time today. As far as economic numbers this morning at 8:45 Central Time, the PMI manufacturing final is due out 9 a.m. I should say this morning Central Time. The ISM manufacturing index, construction spending and job openings and labor turnover survey comes out. After that, we've got a couple of talking Feds due to speak today. At 10:30, we have Fed member Williams, and at noon, a very vocal person in the Fed, Bullard, is due to speak. And at 1 p.m. today, we have the Fed's Beige Book coming out. Now, whenever I see that Beige Book coming out on a Wednesday, I know we are 2 weeks from the next Fed meeting. Speaking of Fed meetings, Canada is expected to raise interest rates in Canada by 0.5% today. We'll have to keep an eye on that as the day goes on. But as far as other things to focus on this morning, the Fed is due to start quantitative tightening today. After yesterday, Yellen admits to underestimating the depth of inflation. The president met with Yellen yesterday and Powell in a game of who's to blame for inflation. OPEC Plus is beginning to crack a little bit while members pick up scraps from Russia and their inability to provide crude oil due to the sanctions. And concerned prices may keep consumers away from using oil. There's a little bit of concern that prices get too expensive. People are going to back away from it. So, of course, they want to make sure they're continuing to sell plenty of crude oil. As usual, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome on the forecast this morning and every morning. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. A quick look at the VIX, the dollar index, and the 10-year yield this morning. VIX down slightly at 26.02 last time I checked. Dollar index up again a little bit, 102 the last I checked, and the yield on the 10-year 2.88%, again leaking back to the upside. As always, got to say good morning to everybody. Good morning, Shaw, Brian. I'm not having trouble with the charts on Tradeovate this morning, but I do have a new computer, and I have exorcised all of the gremlins, I hope, and things seem to be running very smoothly here. Chilling with Dylan, good morning. James Swan, good afternoon to you. Theo, always a pleasure to see you. Scott Saw, Andy Concord. Spencer, good to see you. Zach, good to see you. Spencer saying he's had that problem before to Shaw with his internet connection. It was cutting in and out. Make sure you're hardwired in if you can do it, Shaw. Tachyon, good morning. Where did I go here? There I am, chilling with Dylan. Looks like Charles passed step 1 yesterday. Congratulations. Hey, it's all you, my friend. It's all you. If I had anything to do with it, I'm very happy about that, but Your performance is 100% on you, and I'm glad to be any part of it if I even am. Chilling, some of my older computer doesn't handle Trade Evade that well anymore. I make sure to restart my current computer whenever I start having any type of lagging issue with Trade Evade. Everybody congratulating Charles March, and that's a great thing, Charles. Bill, good morning, Shaw. Isn't the computer or internet issue? Marcelo, good morning, Glitter Sandwich. Alfred, Frederico, good morning, Vince. Drum Lab, good morning to you. Sarah Hall, as always, happy morning to you. Prayers and love as well. ZK, good to see you. Got my first combine reset today. Forgot to exit all trades after losing streak and discipline break. Got a fresh start in discipline and combine today. Learned a lot yesterday. A new day of opportunities. Absolutely. These sometimes these mistakes that we make, and sometimes these things that happen to us and around us give us good opportunities to learn. Tachyon, every platform has a pull all orders and flatten button. Get used to hitting that on every dome, on every product you trade at the end of the day. I'll just go through and I'll just put pull all and cancel, pull all and cancel, pull all and cancel when I know I'm done for the day, because you put an order in and it slides off the dome, or you're not looking at the charts, it's not showing on your charts, whatever it is. Just make sure you just do that, make a habit of it, just because we don't want to become the accidental trader. Dead letter opener, James Swan, good morning. Yep, every day's a lesson. Rusty Golfer, I Print Money, Jeff Dolan, Zachary, good to see everybody. Mid-Country Gaming, good morning, everybody. Mid-Country Gaming's thinking of buying weakness today. Well, we'll take a look at the charts and see what we're seeing here. You may be right. Dead letter opener, Sonny Ron, John Doherty, a pleasure to see you. Looking forward to seeing you in the flesh next week. It's going to be a lot of fun. Tachyon, next Monday for group coaching, can we go over how you prepare the forecast, please and thank you? Let me write that down, ZK, and I will get that prepared for you. Forecast prep. It aligns very nicely with my preparation for my trading day. Little differences in there, but I'll be happy to kind of go through what I do. I'm sitting down usually about 6 o'clock in the morning to get prepared for the trading day, and I will do that. So I think that's Zach for Prep Monday group coaching. Speaking of group coaching, we do have a good question today, emailed in on how to play stops. I'll go through how I look at placing stops, and I'm looking forward to it. It should be another interesting group coaching session for us. I'm putting in the link right now in the chat. If you're not registered for it, register. It's at 1 p.m. Central today, so I'll look forward to seeing all of you there if you are so inclined. And ZK, next Monday, I will get something prepared for us to take a look at how I prepare for the market forecast. Reset is no shame. This is a learning environment, 100%. We learn more from our failure, our lack of success than we do probably from success, right? All right. Who else we got here? All right. Keith, good morning. Juan, good morning, my brother. Love you. Rob T, good morning. Yeah, that's I didn't realize that the Queen of England has been the Queen of England for 70 years. That's just amazing, and that's quite the celebration you've got going on over there. Anne Marie, always a pleasure to see you. Jeff, today is going to be a great day, or a Golden Graham's day, whichever you'd prefer. Kevin, call Top Step. Some accounts are not connecting with real-time data. They said they're working on the issue. This is why tickers may be highlighted In gold or yellow, yeah. If you're having trouble with the real-time data, it's gonna default to a 15-minute delay, and that's where that yellow or gold color comes in on the product side. Sarah, again, congrats, Charles. Stephen C. Ron Merlot. Great job, Charles, taking the plunge and signing up for the combine today. Well, welcome, Ron. We are looking forward to your success, and anything we can do to help, we need to know. So make sure you send us good feedback and suggestions on what we can do better. Always looking for that. Joe, good morning. Still on my my Combine 2 journey, but controlling risk, always number one, control risk. Alfred, good morning. Trading research, good morning after a cup of coffee in northern Indiana. I've got my little cup of coffee here. Got this at a Who concert, so many years ago, probably about 20 years ago. I've had that coffee cup. Good morning, Columbus, Jeff, Chris, Spencer. If you click drop down on your account balance and trade of 8, there's a cancel all button that cancels everything across your account. You can trade if you trade multiple products. Good suggestion there. Literally happened to me last night. Left an order in. Ugh. Yep. Yes. Thank you. I know the button was too distracted on other things at the same time. Got too emotional. Yeah, you know when you start feeling that emotion, when you start feeling any venom in your veins, anything that you're really starting to fret about, know that you are at risk of making those mistakes and stepping away from your strategy. James, excellent. You can make group coaching today. Excellent. Very good. Tachyons, thanking everybody for the support. Can you show us examples of your end-of-day journal? Let me write that down as well. Maybe we'll have a chance to look at that on Monday for group coaching. I'd like to set up those. Otherwise, we could take a look at it today, but I'd like to, get a good example and get things set up for us. So we'll focus on that on Monday, if that's all right. Trading research. She's not my queen. Rational trader, the rational investor. It's good to see you, Brian, as always. Michael H. Dan Emmons, good to see you. Yep, QT begins. Good thing nobody knew this was coming, or they would have sold off equities and bonds in unison for 5 months straight. Well, we've been waiting for it. We know it's coming, and apparently it's coming soon. Jeff, good morning. Michael H. John's Rally Cup, yeah. Kyle, good morning. Pinball Wizard. I never tilt at all, Rational. Good morning, Patrick, Diedrich, and my goodness, good morning, everybody. All right. So, again, here's the link for group coaching. Here it is again. Just register, and we'll see you there at 1 o'clock. Got one emailed in question. It's going to be a good one, and you're always welcome to bring in your questions on the fly. I love to be challenged that way. I learn more from group coaching than I probably provide as information for you guys. So I'm always looking forward to that. Three Lions Insight, good morning. Janak, any chance we can do a mini or market profile class in group coaching or a full class sometime soon? Yeah, we can. But in our archives on YouTube, there's classes called Top Step Foundation. In week 4, there's a pretty complete class about market profile, the basics, the vocabularies, the tools, and some of the nuances that it does provide. But I'm always looking forward to having the opportunity to talk about that again. So, Janek, I'm going to write you down, and maybe we can focus on that next Wednesday in group coaching. I'm hoping I'm going to be able to read what I'm writing down right now. Profiles. All right, I'll look forward to doing that. Good morning, Brody, Mike, and RS Trader. Okay, I've been yammering long enough here this morning. I'm going to go ahead and take us into the charts. We're going to start with the daily in crude this morning because we've just started the opening range. Not seeing that there's any great opportunity there, but we're going to see what happens with the opening range. We had a good opening range trade yesterday in Make Hogue Money, and we'll see if that flies for us anywhere here today. Let's take a look. All right, so this is the daily in crude. Now, yesterday we got all the way up to $120, and I think that scared a few folks. Let me get my notes here. We got some possible changes in OPEC. We know that they're meeting today and tomorrow. It kind of changes the face here of crude oil. We added 20,000 contracts on high volume on a push to a new high that failed. This is a bearish piercing pattern, which is a reversal pattern, and I'm looking at the increase in open interest that occurred during the regular trading hour session yesterday as new shorts, new business coming in betting against higher pricing. That open interest and volume was pretty strong on this reversal pattern. It's going to be very news sensitive as far as the OPEC meeting is concerned, something we're going to have to probably keep an eye on Twitter if they do start chirping. So yesterday we had a lot of overnight longs in this market. The overnight longs tried to push this market higher. They were unable to do so. And looking at the direction of this market through the session yesterday, and then the addition in open interest is what leads me to believe that we ran into some pretty good short betters here. What do we have? Well, we had weekly kickoff, which offered a long opportunity for about 100 ticks. And once it broke, it offered a short opportunity to the downside. What did that downside create? It created a late spike. This late spike to the downside begins basically at 116.40, our weekly kickoff high. And it looks like the market has opened to another test of that as we speak. We have overnight longs. Settlement is down here. The 5 o'clock open ended up being right here. So we've accumulated some overnight longs here. Let's take a look quickly here at the first minute of trade, which has been left at the low of the session. It is also right at weekly kickoff level here, weekly kickoff high. This is pivotal for us. If we continue to hold the opening range as the low of the session, we can continue to look for potential longs to the upside. Although I'm thinking that any push to the upside is likely to be a little bit hollow with the information we got from the regular trading hour session and the increase in open interest in that direction yesterday. So I'm going to be watching to see if we take out the low of the opening range, it's going to be below that inflection level that provided two great opportunities yesterday. And here we are once again, right at 1640. I got to try and stay a little bit patient here because the market is moving back into value from yesterday. See how this value area is above weekly kickoff low. We've opened at really the base of the late spike. I'm going to say that the base of the late spike is the low of this bar here, which is 1645. So we're right on it. Of course, it's going to be right on it. It's going to make it more complicated for us today. If we cannot hold that low of that opening range, if we can't hold that and we start to show some acceptance through time, volume, participation, or momentum below this level, I think there's plenty of space for this market to turn around and head lower. So much of it, of course, depends on what OPEC is doing, what OPEC says, what kind of scraps they're going to pick up from Russia being sanctioned. All of these things remain out there in the universe and things for us to think about looking for opportunities. We did open outside of value. Acceptance inside value could push this price, could push price higher. Anything can happen, and what I'm thinking is it's probably going to happen right around our opening range today, right around weekly kickoff high here. As long as we leave that opening range at the low of the session, I'm going to be thinking about looking for longs. But if we can't hold this level and can't hold that opening range, a downside move may be in play. If we've got some sellers, some longer time frame sellers in this market, they're going to be holding and protecting these levels up here. Good morning, Ray. There's my wildebeest trader. All right. Here's the S&Ps. We didn't really do much on this pullback yesterday. We lost open interest. That, again, is a shift in personality. We've seen open interest increasing now on up days, and now we've got a down day that has decreased open interest. It did bring in volume, but that's typical for days in the equity futures markets, that they just bring in more volume on down days. All right, so here we are. What else do I have to talk about here? Oh, are we perhaps creating a bull flag here, a launching point for a continuation move to the upside? Recent high that happened on Sunday night is in overnight activity. It's not likely to hold. Markets don't like to leave recent or all-time highs in the overnight session. Let's take a look at this on the 30-minute chart here. So here's Friday settlement. We open Sunday night. We put in this high Sunday night, and we've been coming off ever since. But when we were at all-time highs, just with amazing consistency, every time we put in a new all-time high in the overnight, it didn't last very long. It was either taken out that day or the day after that. So we've got a situation where the market has changed direction to some degree and has put in a new recent all-time high in the overnight session. I'm not looking for this as a strong high that is going to hold us. Now we've got a situation where we've lost open interest yesterday on an attempt to move to the downside that wasn't very successful. We've created a channel here that might be indicating a bull flag. If we accept above this trend line and continue the move to the upside, that's going to be indicative that, hey, this ended up actually being a bull flag. We've got to get it to prove that before I'm actually going to believe it. And we're going to be opening right in that area. These markets are opening really in areas that make things a little bit more complicated, and that's just the way markets are. And as we always say, anything can happen, ACH. So looking here at the 30-minute chart, this could end up being a bull flag that could spring price up to and above this week's extended trading hour high, which again, that's a new recent high in extended trading hours, not likely to hold. So we've got the market opening in range and in value. That does suggest patience, but if we kind of hold above this trend line, I'm going to extend this just a little bit here and make it a ray so that we get the chance to see it throughout the day. If we hold above that, I'd say there's a good possibility of us rejecting value from yesterday and looking for prices higher to achieve two-sided trade. Yesterday's high and low, overnight high and low, in short time frame look like interesting levels. I'm thinking there's something bigger in front of us here today. We do have, some economic information coming out that is highly related to inflation. We have to see how those numbers come out, of course. After 9 o'clock, we should be relatively freewheeling, except for the Fed speakers after that. Take a look at the Nasdaq now. So it reads almost exactly the same as the S&Ps. We had some good volume, lower open interest on this pullback yesterday. when we've been looking at these, all of the down days have been good volume, good additions to open interest. Not all of them, but a good percentage of them. The days when we've had pullbacks against the grain here, they've been low volume and losing open interest. Now we've changed things a little bit. We've added open interest on up days and lost open interest on the down day yesterday. Notice these things. These things can be very gentle nuances that can tell you that there is a change in the marketplace coming. Do I think that our absolute low for this whole recession thing is in? I doubt it. But what the market is telling me is there is a probability that we're going to get to higher levels before we turn and then maybe finally put in our low at some point later in the year here. So short time frame structure is opposite the longer time frame structure. Well, that's how it starts, ladies and gentlemen. We have another potential bull flag. Again, our recent high is in the overnight session. The market doesn't tend to like that. So here we go. It's a very similar situation to the S&Ps. Here's our bull flag. We going to open up above it? Are we going to start to see buyers come in and push this market to usurp the high from Sunday night, which I think there's a pretty good probability of. But again, we've got to hold above this trend line. We're going to have to take out yesterday's high for us to do so. This is not, this is looking pretty good because, again, yesterday on this lower value, but an attempt, I think, to move higher, value lower, losing open interest, the market attempting to move higher on higher volume, there's some information there for us. Again, we're inside range and value that suggests patience. We are potentially breaking out above a bull flag, which is also important information. We've got last week's high here, which was somewhat supportive, somewhat resistance. I'm not really basing much of my opportunities on this. And we've had 3 straight days of opening range trades being relatively successful in the equities. So I'll be watching the opening range trade as well. All right. Let's take a look at gold. Okay. Volume was pretty good yesterday on that pullback. We kind of broke the rollover range to the downside yesterday. We settled outside down below it, but we didn't bring open interest. We lost open interest. So there's a little bit of a taste of long liquidation here. Maybe we got a little bit too long up here. Maybe yesterday they decided we're going to get out of those and we're going to see what happens in the future here. So when we do take long liquidation into the marketplace, we actually bring selling power away from the market. And that selling power is initiative selling power. The reason they would be selling is because they want to flatten those short positions or long positions. Therefore, that makes them initiative. So we had initiative selling, losing open interest, long liquidation, taking selling power away from the marketplace. I think we've got some space before we get to either weekly kickoff level. So I still think in large part we're in short time frame control. And with our pullback back into range from the previous balance area, I believe that to be true. Take a look at the 30-minute chart. RS, no, when I'm talking about open interest, I'm talking about futures open interest. Futures and options are the same because there's no value creation. For every long, there's a short. All right. So here's the 30. We had some overnight shorts in the market here that have really capitulated quickly. So all of those long liquidation traders yesterday that took that selling power out of the market maybe we had some short time frame sellers getting short here, and we've taken the market right back to where we opened. So our overnight inventory has now been resolved. The market is now back in range and back in value, suggesting we try and stay patient. And I'm kind of sorry I missed this move here, because look at how short we were overnight. Overnight inventory is usually shorter time frame, weaker hands traders that are just trying to keep price moving to the downside. And they're hoping for traders in regular trading hours to continue the push to the downside. They didn't see it today, so they got out. They all just bailed out. I think the way that Dalton talks about overnight inventory is very apropos. He says, when we have the short time frame traders all piling in one direction and pushing price, it seems like a really good party. But everybody knows that at this party there's the chance of a fire. So everybody stands by the door. All it takes is for a couple of people to run towards the door. They don't even have to yell fire, and everybody is trying to get out. So you have all of these short time frame pea shooters like me, short, and somebody runs to get out, and that's all it takes to start that fire back to the upside, back into range, back in value, give us a chance to take our breath, take a profit here, see what happens as the day goes on. We had a gap. That gap was very quickly reconciled. Here's the euro. Oh. So range bound still. 1, 2, 3, 4, 5, 6, 7 days of range bound. Short time frame control. Yesterday we did add 4,700 in open interest, so there's an indication that the change may be coming. We're really going to be trying to focus on the balance extremes for our opportunities, and those balance extremes, taking a look here at the 30-minute chart, okay, balance extremes, we're looking at 107.93, 107.93. We're adding the very low volume range from Monday, and our extreme low here is 106.50, 106.50. Anything in the middle, we're depending on short time frame levels. Look at the short time frame level that held for us yesterday. This naked point of control back here put in the low. This high here, just a low from Monday, a high from Friday. Short time frame levels tend to get respected when short time frame traders are in play. Which levels is where it makes it a little bit more complicated. Here's our overnight low. Here's our overnight high. Here's yesterday's high. Here's yesterday's low. Value low. Value low. Value high. All of these could be viable opportunities for us to look for an execution because they allow us to limit risk. Problem is, you get too many visuals with which to look for, and you end up cutting yourself up you die by 1,000 cuts. So try and stay patient. This market opened in value and in range. Better trade locations are likely to come as the day goes on. Here's for the 10-year. Okay, we've got another test of a target-rich area. Weekly kickoff low, last week's low. There was a whole bunch of things that converged there yesterday, and we've taken another little test down through that level. Sellers seem intent on trying to get us through there, although yesterday's open interest, we lost 26,000. So this isn't new sellers down here. This is longs liquidating. Maybe they're a little too long at the high here. So they're getting to an area where they need to adjust inventory, and I think they've started to do so. If we can't exhaust buyers down at this level, we can see this market return to yet last week's high or even points higher. But we all know that rates are going to creep higher. So my thought is, when we finally get through this target-rich area down here, there's a pretty decent downside opportunity if that is the case. Remember our acronym here, ACH, anything can happen. Here's the 30-minute. here's that target-rich environment. We had yesterday's low. We have the low from last night here. We have a naked point of control. We have last week's low. We have weekly kickoff. This is just a target-rich environment. I'm looking at this as a place that I certainly want to fish. Got to limit the risk, and this allows us that chance to limit that risk. If we looked for a long above weekly kickoff high after the open or on the open here, we're already heading in the right direction. So I believe that there's going to continue to be some fish here until there's not. And for the 10-year, for the nat gas, I should say, sellers continue to try and test that weekly kickoff low. We tested it yesterday. We tested it in the overnight last night. We added 9,100 in open interest on this push to the downside. So if we have gotten into a situation where we're too short to break, this level down here looks real good. I mean, overall, the upside communication here, okay, the upside momentum, I should say, the structure is still good to the upside. So we're getting an opportunity for a pullback up against a support level here. And we had a lot of new short bets yesterday. If they don't get what they're looking for, they're going to bring buying power on their exits. Take a look at the 30. Wow, look at this. Oh man, where was I? I was looking at this, but I don't usually trade nat gas, but what an opportunity for us. Weekly kickoff low. We actually closed below it. We tested right down to it here in the 630 bar before the open. The 8 o'clock open probably looks like it's the low of the session. We're bringing price right back into value, back to point of control, getting a nice pullback off of this. If this is enough to scare some of our new shorts that got into the market yesterday, we could see this market return to point of control up here or even points higher. Remember, the longer time frame structure is still to the upside. Okay, so we've got our tasks set out for us. A lot of conversation going on here while I was going through the charts. I love that. I think that's wonderful. PD, I'm sure that they're working on it. I did see in our support channel that a lot of folks seem to be having trouble getting their data set up correctly. So I know that they are working on that. Okay, so we've got about 6 minutes here before the open. I'm going to be looking for the good. I'm glad that the presentation has improved. I was getting a lot of gremlins, and I think we've got them taken care of. So let's take our deep breath. I'm going to remain humble, grateful, and creative, and patient in my trading today. It's almost like it's a golf swing. There's a million little parts to the golf swing, and one of them's off, it throws the whole swing off. Seems it's a little complicated for trading, but it does seem like if one of the table legs is not there, we'd have a tendency to fall over. So let's get out there and profit today. I'm looking forward to seeing everybody for group coaching today. Again, we've got a really good question and some really good questions coming up, and I appreciate you popping those questions in there, and we are going to address them within the next couple of group coachings. And again, I appreciate everybody watching. Have a great trading day. Get out there and profit. Trade well today, and I will see you for group coaching today, as well as the market recap. We're also going to have a market recap on Thursday. There's going to be no podcast, as we've got one of the members out of the office this week. Hopefully he's having a very good and safe time. Be good to yourself. Be good to others. say a prayer for world peace, and I'll see you at 1 o'clock for the market for the group coaching. Have a great trading day.